Century Plyboards, that's the stock on our radar, reported a good revenue and EBITDA growth in its Q1 earnings. Keshav Bhajanka, the executive director of the company, is joining us now to take a few questions. Keshav, good morning. Thank you so much for joining in. You have given us a guidance update for different segments. So let's drill it down further. Let's talk about how the prices of timber and chemicals are currently compared to last year. What is the outlook going forward? Because your margins have been flattish on a YY basis if we talk about a consolidated level. What is the overall margin expectations when it comes to FY26 and FY27?
Good morning. Thank you so much for having me on the show. I think with regards to the expansion in EBITDA margins that you're talking about, if we look at EBITDA without Forex, it has actually gone up by about 29%. So it is quite a big delta. But as you know, the euro and other currencies have shot up. So because of that, EBITDA post Forex doesn't seem to have much of a change. Having said that, in terms of raw material prices, timber prices as far as MDF and particle board have certainly eased up slightly. I think the peak or the highest raw material prices are now behind us. So going forward, I think this should aid margins in the sector. As far as chemical prices are, they are pretty much stable. There isn't a very big delta. There are small changes that keep happening, as is usual with commodities. But I think in terms of margin guidance, what we had committed, 12 to 14% for plywood, high single digit for laminate, 15% for MDF, and steady state 15% for particle board once the new plant ramps up. I think we're well on line to achieve the same.
Okay, so the margin guidance across all segments remains the same. Even your sales growth, 10% plywood, laminates 20%, MDF 20%, particle board 40%. Keshav, these numbers also, you maintain them, this guidance?
Yes, definitely. I think, considering the overall slightly bearish scenario in the industry, our overall growth of 16% on a console basis has been healthy, and we have exceeded the guidance given across segments. Plywood has had a revenue growth of about 15%. MDF has had a revenue growth of 23%. So the miss has been predominantly on account of particle board because the new capacity has not come in. And in laminates, where the execution, finally we are seeing improvements on ground, but the scale up is taking slight amount of time.
So on laminates, do you maintain your 20% consolidated guidance? And on particle boards, the 40% sales growth, considering in Q1 there was a decline?
Yes, definitely. Particle board, the new capacity is actually a 800 cubic meter plant. And our earlier capacity was only 250 cubic meters. So the plant in itself is more than 3x the earlier capacity, and we were hamstrung by capacity. So I think particle board will not be a challenge. In laminate,
so what is the capacity utilization on the new plant? Sorry to interrupt. And what would be the incremental revenue?
The new plant, as of now, has just began operations. 27th of June was actually the date of commissioning for the new plant. At peak revenue, the new plant should have a 500 crore plus turnover potential.
Keshav, how has pricing been so far? What about timber and chemical prices? Timber prices have remained at slightly elevated levels. Have they seen some moderation? And if not, are there any plans to pass on those elevated costs to your consumers?
I think I just mentioned slightly earlier that timber prices have moved past peak. They have cooled off slightly, and I think the highest or the peak of timber prices is behind us. Chemical prices are more or less consistent, so I don't think there's too much of a need to increase prices at this point in time. But it's a wait and watch scenario. Going forward, we will see, and we'll play it by how demand and raw material prices pan out.
Got it. Keshav, you do have capacity utilization which is coming in from new plants. Any other capex plans that you have in place? What would the balance sheet look like in that case? What's the updated debt right now?
Currently, our only frozen capex, large frozen capex, is the new plywood plant in Hoshiarpur. That plant will have a capex of anywhere close to 100 to 150 crore rupees, and it is likely to come up within H1 of next year. So that is the only large capex that we have planned. We have nothing substantial that has been approved by the board yet. Yes, there are discussions for other expansions, but nothing has been frozen yet. Having said that, with regards to debt, I think our long-term debt is within 800 crore rupees, And going forward, the objective is that we will deleverage the balance sheet over the course of the next few quarters. As you can see, our cash generation is quite strong and profitability continues to improve. So I think within the next year and a half, our objective will be to get back to practically zero debt levels.
So from 800 crore, you're saying you will be a zero debt company in the next 1.5 years, purely led by internal cash generation and accruals, not some external. Got it. Thank you very much, Keshav, for joining in. Always a pleasure chatting with you. Get into a break. On the other side, Sheshadri Sen of MK Global will join in, and he's going to give his view and perspective on how investors can weather the current turbulence that we're currently seeing.